You are already paying for this. Every flight, every delivery, every grocery bill. Hidden beneath modern life is a system quietly charging humanity for the right to exist. And according to its architects, it's saving the planet. But what if the forests being protected were never actually in danger? What if some of them didn't even exist at all? Tonight, we go inside a $1 trillion market built on something no human being can physically see, touch, or verify: carbon itself. On paper, the idea sounds simple. Companies that pollute can buy carbon credits to offset their emissions. One company cuts pollution, another company pays for the right to keep polluting. The atmosphere wins. Everyone goes home happy. Except that isn't what investigators started finding. Across Europe, South America, and parts of Africa, brokers were selling environmental protection credits tied to forests already protected by law. Forests never under threat to begin with, and in some cases, forests that satellite data struggled to even locate. Yet somehow, billions of dollars continued moving through the system. Corporations bought the credits. Governments approved the reports. Investors celebrated the green transition. Meanwhile, global emissions kept climbing because the real product being traded wasn't cleaner air. It was belief. The modern carbon market operates like a digital casino wrapped in environmental language. Somewhere in London, New York, Singapore, or Geneva, traders stare at glowing screens, assigning financial value to invisible gases floating through the sky. Carbon became currency. And once that happened, the incentives changed. Entire industries emerged around creating credits as cheaply and quickly as possible. Consultants, brokers, verification firms, climate auditors, carbon exchanges, every layer taking a cut. The more credits created, the more money flowed into the machine. Investigators later uncovered projects claiming to save forests that had almost zero risk of being cut down in the first place. In some regions, local communities had no idea their land had been turned into a tradable environmental asset. Yet on financial paper, those invisible savings were being sold globally to corporations desperate to appear sustainable. Airlines advertised carbon-neutral flights. Oil companies launched green campaigns. Massive corporations stamped products with environmental labels designed to reassure consumers. But behind the scenes, critics argued something terrifying. Many of these companies weren't reducing emissions at all. They were purchasing moral permission to continue. And the world accepted it because the system sounded too complicated to question. Then came the satellite audits. Independent researchers began comparing carbon credit claims against actual environmental data. What they found triggered global controversy. In multiple investigations, enormous percentages of carbon credits were accused of being massively overstated, unreliable, or functionally meaningless. Some environmental projects claimed impossible levels of climate impact. Others used predictive models so flexible that almost any outcome could be justified on paper. But by then, the market had already exploded into a multi-billion-dollar ecosystem. Banks invested in it. Governments endorsed it. Entire climate strategies depended on it. And the deeper investigators dug, the stranger it became. Because carbon credits weren't physical products. They were mathematical promises about alternate realities. A company could claim pollution was offset based on what might have happened somewhere else under hypothetical conditions years into the future. It was environmental accounting built on speculation, layered over prediction, layered over financial incentives. Critics started calling it a modern indulgence system. Not reducing damage, just paying to feel absolved from it. But the most unsettling part wasn't the money. It was the psychology. Because the carbon market transformed guilt into a subscription service, fly across the planet, pay extra, burn fuel, offset it, produce emissions, purchase credits. The system offered something humanity has always wanted: the ability to continue consuming while feeling morally protected from the consequences. And that made the market nearly untouchable. Questioning it often sounded like questioning environmental responsibility itself. Meanwhile, financial firms discovered something incredibly valuable. Fear could be monetized. Climate anxiety became an asset class. Entire portfolios emerged around environmental trading products tied to invisible future outcomes. Yet, despite decades of carbon markets, global emissions continued reaching historic highs, which raised a dangerous possibility. What if the system wasn't designed to solve the crisis, but to financially absorb it forever? Today, the carbon market continues expanding across the planet. Governments support it. Corporations depend on it. Investors profit from it. And most ordinary people barely understand it exists. Somewhere right now, financial institutions are trading atmospheric calculations worth millions of dollars based on models the public will never fully see. A forest becomes a spreadsheet. Pollution becomes a negotiable asset. The sky itself becomes inventory. And buried beneath all the technical language is a simple, unsettling truth. Humanity may have created the first economic system capable of monetizing reality itself. Not oil, not gold, air. Invisible, unverifiable, essential air. Which leaves one final question. If corporations can buy and sell the right to pollute, who actually owns the atmosphere anymore? The strangest part about history is how often reality behaves like fiction. And the deeper you go, the less stable the world begins to feel. Drop your thoughts and subscribe if you want more true stories that are deeper than entertainment.